Good day, everyone. For this particular day, we are going to look into and we are going to discuss information technology risks and controls. Now, for this particular session, this is going to be very special. I'm very excited because it would be a partnership or collaboration project between me and my students. So to discuss this particular topic or chapter, it will be Mr. Vadimir Añora who will be in charge to do such. And then I will also be sharing my inputs about this particular chapter or topic as needed on the situation. All right, so let's begin with this one. I'm excited. All right.
I'm Vadimir Añora, and at this very moment, we will talk about information technology risks and controls. What is risk? Risks are the chances of negative outcomes. Just like as humans, business enterprises face a variety of risks, including business, audit,
I need to pause for a while, so I think there would be some parts here that will be repeated because of what I did. Anyway, I would just like to highlight before Vladimir would spill really the great information about the chapter that once in a while, if there's a need to add more inputs, I'll be pausing the video. So hopefully he don't mind or he doesn't mind. Anyway, let's continue.
audit, security, and continuity risks. We do not have the capacity to eliminate those risks, but we can do something to balance things. A business risk is the likelihood that an organization will not achieve its business goals and objectives. An auditor must first become familiar with the business strategic plan. Risks may emerge from external environment, such as the risk that a new competitor will enter the market or the risk of a poor economy. Other
All right, so business risk actually is also the failure of a business to achieve its objectives, or it could be ranging from the BMGO like line. So vision, mission, goals, objectives, and these objectives could be later on translated to strategies and policies. So strategic means long term.
risks may rise internally, such as labor disputes, equipment failures, system failures, or even management fraud. Audit risk is the likelihood that an organization's external auditor makes a mistake when issuing opinion attesting to the fairness of its financial statements, or that an IT auditor fails to uncover a material error or fraud. Audit risk is a combination of risks. It includes inherent risk and control risk. Those are the risk of material misstatements and the detection risk. Inherent risk is the element of risk that exists due to the nature of the business environment and its activities. Control risk is the probability that an organization's internal control system will fail to prevent or detect a material misstatement in recorded transactions or adjustments affecting financial statements. Detection risk is the chance that an auditor will not detect existing control failures. Security.
Right, okay, so before we proceed to security risk, so allow me to discuss this part here. Anyway, Añora just summarized this model actually, but allow me to go back to this, most especially that our course is auditing in a CIS environment, and this is all about IT audit. So this is a very good model in which the acceptable audit risk or the audit risk in which the audit would not be able to detect or uncover material misstatements actually is composed of three factors, and these are also the risks: inherent control and detection risks respectively. Now, the first two, I and C, inherent and control, actually are coming from the client or the management or the responsible party of, for example, the financial statements that we are auditing. Let's just say this is a financial statements audit, because this is one type of audit that has been said and has been discussed by us with so many times already, most especially with our subjects. Now, for these two types of risk, the inherent risk is actually coming from the nature of the item or the nature of the account and the industry to which a certain company or business belongs to. And then the inherent risk is from the word inherent, which means innate or by nature of such. There are some accounts, like for example, cash or cash on hand, that would be susceptible to theft compared with inventory items and other items on the statement of financial position, formerly known as balance sheet. There are some industries like mining industries which are very susceptible to threats and risks, for example, about the environment, about hazard, about the welfare of the workers or employees because they're working underground. So those factors would somehow increase the risk levels inherent wise, depending on, again, the account title, the business itself, and the nature industry. And that's inherent risk. That's the business itself. Control risk, on the other hand, is the control present in the business. By the way, before we proceed, what do you mean by control or controls or internal controls? It is, or they are basically any system, process, or set of procedures, steps, guidelines, policies, strategies that would ensure that the company will be able to have four objectives under the COSO framework. For starters, we have three, but for other sources, there's another one. The first one is fairness and reliability of financial reporting. There are internal controls in order for the financial statements that would be resulting from our system would be fair and reasonable. Second one is effectiveness and efficiency of operations. We do not just achieve the goals and objectives of the company in the form of effectiveness, but we also have to make sure that we will consume the least or the most minimal or the lesser amount of resources. And then third would be we want to be in compliance with applicable laws and regulations. So we should be in accordance with the law and ordinances and regulations locally and nationally, if not internationally. Then finally is to safeguard the assets of the business, because of course the economic resources are limited, including also information. They would make or break a business. So if the controls present or internal controls present would not be able to detect material misstatements about the accounts or the items on the financial statements, then that's the risk that we are talking about. And then after determining the three, audit, inherent, and control risk, this is what is left, the detection risk. This is on the part of the auditor, that the auditor or auditors cannot detect the material misstatements found on the subject matter, which is the financial statement, for example, because humans as we are, we could be having or we could be committing mistakes, errors. We could have lapse of judgment, or we could have errors in our judgment, or we can be tired, or we can be susceptible, or we can be subjected to fatigue and other things like health, etc. So these things would have impact on our detection or of detecting the errors and the fraudulent items that would be connected to material misstatements on the financial statements. Take note that we are just looking the material items because we cannot consume like 100% of our time and examining 100% of all financial items during the course of the audit. That would be impractical also. That would be very costly. So only the material items that we are going to look into. Hopefully that is clear for audit risk. All right, let's proceed.
That an auditor will not detect existing control failures.
Right. So let us remind ourselves that there could be some lapses, or there could be some going back of parts since we are looking into this presentation. So it's a video format.
Security risks. Unauthorized access to data may be physical or logical. For example, a user neglects to log off a PC at the end of a workday, and the cleaning custodian or employee may read, or another employee may read confidential emails from that computer. If the user or employee never failed to log off the computer, such access will not be given to unauthorized users.
Yeah, there's a mention of Añora about logical and physical controls and risks. Of course, risks are there that are present in the company, which we can minimize, if not eliminate, because normally the risks cannot be reduced to zero level. So we can manage, mitigate, lessen, decrease, diminish, or whatever the word, for as long as we want them to be lowered down to certain acceptable levels. So the risks will be partnered with the controls, and these controls would mitigate the impact or minimize the impact of these risks or risks. Now, for security risk or risks, there are two types. We have the physical and logical. Physical would relate to the tangible items, or those that cannot, or I mean that can be perceived by the senses, because if they cannot be perceived by the senses, they are actually the second type, logical risks and controls. So intangible items would be logical items. So what I meant is that physical is to tangible, while logical is to intangible. Physical would be, for example, let's say the room itself. So how do we protect a room? We are going to have padlocks and keys to protect access so that only the authorized users can have access to the room. And then another one, for example, let's say for the logical security risk and the control. So we have, let's say, instead of using the physical padlock and the key, so we can have, for example, the information about the person, which could be logged on the biometrics. So let's say the password itself, that is something intangible. So that is an example of logical. All right, let's proceed.
Integrated systems must have a separate passwords, for access to various parts of the system to prevent unauthorized access and manipulation of data. The organization must control for risk associated with the collection and process of data. Allowing users to access the system only on the business premises limits the risk of unauthorized access to employees or visitors. Yes, remote access is a nice feature, but it creates a potential for any hacker to break into an information system. An information system converts raw data by processing it into information. To ensure that the information technology produces accurate, complete, timely, and reliable data, an organization must control for risks associated with the collecting and processing the data. The negative outcomes associated with a lack of data integrity range from poor decision making to increased business risks.
Okay. Now, that is really correct that, for example, if we do not secure the information or any other valuable resources of the company, that it would make or break a business. So that's very vital for the organization's success, especially for the information, which should be secured. I mean, now, in that case, for example, with the information stated a while ago by Añora, that was really on point, that if ever we fail to secure properly the information, that will result to first, or from the first level of effect or impact of that, that is poor decision making of the management, up to the point that it would increase the business failure. And that is failure on the part of the business to achieve its goals and objectives. So that's now the business risk that we are talking about, or that we talked about a while ago at the start, or just at the start of the chapter. Anyhow, let's proceed.
Continuity risks includes risks associated with an information system's availability and backup, and also recovery. Availability refers to security that ensures that an information is always accessible to users. Hackers may threaten the availability of Hackers may threaten the availability by flooding the system and overloading the servers to shut down a company's website. Not only sales will be lost, but also the customers due to unreliable system. Backup and recovery procedures ensure that in case of interruptions in the business in continuity, procedures are available to restore data and operations. Managers and auditors must assess IT risks to determine how to apply resources to risk management. Risk management attempts to balance risk against the needs of an organization. To balance risk, you must assess it. This requires both identification and measurement. It also requires determining levels of acceptable risk since no organization cannot afford to expand the resources to control risk to zero levels. In 1992, the Committee of Sponsoring Organizations of the Threadway Commission or the COSO developed a model for evaluating internal controls, and this model has been adopted for the generally accepted framework for internal control and is widely recognized as a definitive standard against which organizations measure the effectiveness of their systems of internal control. Yeah, the causal framework identifies internal control as a process affected by an entity's board of directors, management, and other personnel designed to provide reasonable assurance of the achievement of objectives in the following categories. We have operational effectiveness and efficiency. We also have financial reporting and reliability, and applicable laws and regulations compliance.
All right. So those were the three objectives that I've said why internal controls should be present in the organization, and this was based on the COSO framework. Please take note of the definition of COSO, which is the Committee on Sponsoring Organizations of the Threadway Commission, and like that's the lengthy name. All right, and next would be the interrelated components of internal control.
We have here the components of internal control. We have first the control environment, the risk assessment, control activities, information and communication, and monitoring.
Okay, so monitoring is at the
For
bottom,
control
right? It's at the bottom of information and communication.
environment, management must exercise integrity and ethical values. We have to make a commitment to competence, use the board of directors and audit committee, facilitate management's philosophy and operating style. We have to create an organizational structure, issue assignment of authority and responsibility, and utilize human resources policies and procedures.
All right, so I think he will be proceeding to the second one. Actually, of course, that's environment. And then this control environment is basically the management's attitude of internal control that would have impact on minimizing the risks. So the control environment is the first very component of internal control. Actually, some books would be saying interrelated components because they are the five of them. Now, control environment is the tone at the top. So it sets the mood or the tone of the organization. So this is supposedly the kind of mindset that the management should be showing to everyone, whether internal and external. And more importantly, for example, for the internal, on the sense that the employees would be seeing them, and so they are also going to apply themselves or to themselves. Because how can we expect people to follow us if we do not even follow our own rules or procedures in the process? So we should be the living examples if we are on the part of the management. I meant that we here as on the part of the management. Anyhow, so very good point though. Next is risk assessment. Now, actually, there is an acronym for this, and I'm pretty sure that Añora will discuss the subsequent ones. But then the acronym here is actually CRIM. So CC, two C's, RIM. Control environment, control activities, risk assessment, information and communication, and monitoring. So these 5 components of internal control are very important because wherever we go, this should be what should be on our minds as being part of the management of any business or organization.
Organizational structure, issue assignment of authority and responsibility, and utilize human resources policies and procedures. In the risk assessment, the company must create company-wide objectives, incorporate process-level objectives, and perform risk identification and analysis, and also manage change. We have here the control activities. We have follow policies and procedures, improve security that applies to the application and also to the network of the company. We have
now, control activities are also known as control procedures. So this would be our ways or specific ways as to how do we minimize risk in the organization. So these are the controls specifically.
Conduct application change management, and we also have to plan business continuity or backups in times of emergency or there's natural disaster may come or maybe may happen or the system shutdown or there's a system shutdown so that the company's information and processes will still be intact and the business process will go on. And we also have to perform outsourcing. And we have here information on communication. We have to measure quality information and also measure effectiveness of communication. And in the monitoring activities, we must perform ongoing monitoring, conduct separate evaluations to the operations or even to the employees, and we also report deficiencies to the management in which we can determine which aspects needs improvement. These components works to establish the foundation for sound internal control within the company through directed leadership, through directed leadership, shared values, and a culture that emphasizes accountability for control. The various risks facing the company are identified and assessed routinely at all levels and within all functions in the organization. Control activities and other mechanisms are proactively designed to address and mitigate the significant risks. Information critical to identifying risks and meeting business objectives is communicated through established channels across the company. The entire system of internal control is monitored continuously and problems are addressed timely. Quality control standards. We have here the ISO 9000 and the Six Sigma. ISO 9000 certification does not necessarily ensure that the quality of a company's products or processes. It simply means that the organization complies with the documented standards that would contribute to high quality. Six Sigma, on the other hand, is a set of management techniques intended to improve business processes by greatly reducing the probability that an error or defect will occur. Here we have the steps in the Six Sigma, it's DMAIC. As known as the DMAIC, we have define, measure, analyze, improve, and control. The Auditing Standards Board, or ASB, of the American Institute of Certified Public Accountants issues statements on auditing standards as guidelines for external auditors in conducting the financial statement audit. Several of these guidelines are relevant to the issues of risk management, risk assessment, IT risk assessment, and internal control.
Right. So in addition, also these standards actually are coming from US, so they're applicable to US companies. But these standards also are adapting to newly issued standards in the international setting. So that's why we can just see some noticeable similarities and very few differences, perhaps, in terms of like the number and in terms of the content, but more or less the concepts will be similar. So we don't have to memorize the numbers and so on, like the complete title, because anyway, we can check them out even in practice.
We have here the SAS number 55. This is the consideration of internal control in a financial statement audit. And this was issued in year 1988. This is the first auditing standard to address the need for auditors to understand internal control. And this defines internal control and the three components that auditors must address. We have here the statements on auditing standards number 78. This is the consideration of internal control in financial statement audit, an amendment to the SAS number 55. And this is the revised version of number 50 of SAS number 55 to conform to the COSO internal control definition and its components as mentioned earlier. And this
Okay, for a while. So let's check the difference with the previous one. So we have a while ago.
Control in financial.
What was that? This one. So this was the first standard, and then we can just notice this is still all about, or this was consideration of internal control in a financial statements audit. So how do we place emphasis of internal control to a financial statement audit? So what's the role? Because normally, of course, these internal controls would be the procedures to ensure that we will have fairness and reliability of our financial reporting. And for example, if we are using now the accounting systems, which are the results or which are part of the operation, so would also touch the effectiveness and efficiency of operations. If they are ineffective, for example, internal controls, so they're also inefficient in another sense, they would not really be producing the reports and the financial statements that we wanted to be as reliable or, let's say, fair. Although there could be some ways, as discussed in auditing subjects, that we can perform more procedures as auditors in order to check if really the internal controls ineffectiveness or inefficiency and or would not have much material impact to the outputs, which are the financial statements. And then I am doing this because I am comparing also the title of the next one, which is still about consideration of internal control in financial statements audit. So again, a revision. This is the revision of the SAS number 55 to add the internal control definition. And the prior one was still about like this title.
An amendment to the of SAS number 55 to conform to the COSO internal control definition and its components as mentioned earlier. And it requires auditors to obtain a sufficient understanding of internal control. And this is the statements on auditing standards number 94. This is the effect of information technology on the auditor's consideration of internal control in a financial statement audit, and it was issued in the year 2001. It recognized the pervasive use of IT and its effect on risk and control, and it also
By the way, when you say pervasive, it means it is existing. So it is a prevalent or relevant on the sense that it is really used in much extent. So yes, the pervasive or the ever usage of IT would have impact on risk and control.
Requires auditors to consider the effect of information technology on audit strategy. It also recognized that I, significant information technology use may mean that the audit evidence depends on the controls over accuracy and completeness. And it also explained that auditors should understand an organization's manual and automated procedures used to prepare financial statements. We have here the COBIT, or Control of Business IT. There you have the three dimensions right there of the cube. That is the information criteria, IT processes, and IT resources. Organizations must ensure that their information assets satisfy requirement of quality.
Now, this is really true that the Qubit cube is something that is really extensive in terms of the information technology components and as well as the controls, because we can just see the cube. Hopefully this will be touched a bit, but it's really a cube because there are three areas: IT process, the information criteria, and the IT resources. And the subcomponents though, let's see as to what Añora will talk.
Fiduciary, and security. COBIT further breaks down these three requirements into seven criteria. We have effectiveness, we have efficiency, confidentiality, integrity, availability, compliance, and reliability. Managers must achieve these characteristics while balancing the use of IT resources, including people, application systems, technology, technology facilities, and data. In systems reliability assurance.
Oh, okay. So with the COVID items, Añora did not emphasize such. However, our concern here is that if this is the framework that we are going to make use, the COVID control of business information technology, then we are still going to have good framework and standard and benchmark of the information technology and the controls in the company as to how such will be evaluated. In fact, you can just see here the illustration, like so many areas to look at. Anyhow, so let's proceed to these engagements in which the CPAs can also provide in addition to operational audit or IT audit. And then we can go to specific ones like this is trust reliability assurance engagement.
In systems reliability assurance, in systems reliability assurance engagements, auditors seek to give comfort that controls over an over an information technology ensure its reliability. They identify the controls over the information technology and test the extent to which controls are meeting the objectives or meeting their objectives for the period covered by the engagement. We have here the internal control narratives. Internal control narratives is simply text. It's just simply a text describing controls over a particular risk. Narrative descriptions of internal controls should describe the origin and disposition of each document, list processing steps, and describe internal controls. have here the flowchart.
Right. So before we continue, these are the ways of documenting internal controls. So it seemed like it's automatic here, but supposedly there is a title here that these are the documentation of internal controls, because the chapter actually can be divided into that. We are going to identify IT risks, then we are going to assess and measure IT risks, then we are going to identify the controls appropriate to minimize those risks, and we will now document the controls. So those are the 4 steps in, or areas in, IT risks and controls. And this part is the 4th one, which is all about documentation of IT controls. There are actually ways, like 3 in this chapter, as to the documentation. So we can have the internal control narratives, the internal control flowcharts, and the internal control questionnaires. Now, since there are 3, the company could be looking into what would be the appropriate way of documenting the controls. Now, question could be, is there the best among the 3, like the internal control method of documenting or documentation? So we could be pausing this point in time or point of this video now, so that you will be able to answer, and then we will have the deliberation later on. All right, so at this point rather in time, you should be pausing the video. All right, now the answer is actually no. There is no such thing as the best way or method of documenting internal controls. It's just that some methods would be fit or much better for a certain situation or for a certain type of audit or certain internal control. However, in real life or practice, we can even make use of combinations or all of them, like 1 or 2 or the 3 of them, depending on the case or situation, because one may not be able to answer or capture the entirety of a certain internal control set of procedures or systems. So that's why we can again use any combination of such. All right, so let's proceed or continue. Narratives would be descriptions. Then flowcharts. A while ago, Añora stopped at flowcharts.
Flowchart, these are the tools used to describe the flow of pictures. I mean, these are the tools used to describe the flow of the process. It is used because pictures and symbols makes it easier to understand rather than using the words.
Right, right.
Yes, it makes us easier to understand.
Yeah, in addition, there are symbols on the flow charts and there are arrows. So the flow normally is from top to bottom and left to right when we read the flow chart. So it will be easier because the symbols have their meanings and the flow charts will lead us to the next step. Now, in making flow charts, we want that to be, or them to be, simple and easier to understand. However, there will be times really that because of the interlinking of the processes, so there would be some complexities or difficulties, but not to the point that it is unreadable anymore, or it's too busy because of the arrow. So we will limit that and we'll cut the flow charts into certain parts or aspects. Anyhow, so let's proceed.
Internal Control Questionnaire. This is a tool that allows the auditor to ask questions about internal controls over various applications, processes, or risks such as application program changes or logical data access. It is also said that auditors must be skeptic of the internal processes of the business, or practice professional skepticism. Monitoring IT risk and controls. Risk management requires constant attention. The COVID model identifies several control objectives associated with monitoring, and this includes monitoring the process, assessing internal control adequacy, obtaining independent assurance, and providing for an independent audit. Thank you and have a good day.
All right. So before Añora will formally close the discussion, so monitoring is very important. Actually, in doing the IT audits, as well as if we are on the part of the clients now, if we are actually setting up controls for the company or business in terms of the operations, most importantly, and especially on IT, since our course again is centered on IT processes, it's very important to really monitor like, are our existing controls really performing well or performing as they are intended by the management? So we need to get the feedbacks coming from those existing controls so that whatever feedbacks, whether favorable or unfavorable or positive or negative, then we can incorporate them to our next planning stage for the continuous improvement or Kaizen, that's a management concept, to our operations. We need such because if, for example, let's say it's positive, so we just have to add more or improve further on. If, for example, we believe that there's still more area for improvement, because even if positive, there can be more areas to improve about or of. While if negative, so we have to really revise such to the next planning stage, and the process continues. So we're going to perform those four: identify the IT risks, then assess the IT risk and measure. Then we are going to identify the IT controls appropriate to answer for those risks, and we are going to document the controls. Then we monitor. This is going to be like the fifth step, and the process continues. So that's why this was the end of the
Audit.
point of Añora.
Thank you and have a good day.
All right, so thank you very much, Añora, for your great presentation. And hopefully, guys, you learned something from this collaborative project between me and the students. Then hopefully you're going to find this very positive. Then I'll see you next time for another learning session, especially for the next chapters and of this course, auditing in a CIS environment. And I'll see you next time for again another session, and thank you and God bless to everybody.